Hello, this is Saurabh from Tax Accountant, and today the topic I want to cover is how to build resilience in your business. Last 3-4 years have been quite volatile. When COVID came, businesses on shaky grounds could not sustain anymore, and these days we're talking too much on to recession coming up, 1930s Great Depression may come back, property prices might get wiped out by 50% gone, share market overvalued, bitcoins overvalued, all those things gonna wipe out your wealth within months, So it's quite scary. I mean, if you think that you've been building up your wealth for all that time, and within 6 months, if your wealth is wiped out by 50%, that's quite scary actually. But what can you do to build resilience in your business, right? How you can focus on what you're doing now and don't worry about all those nonsense happening around us, because those things are beyond my control or your control. Nothing we can do, but we have one thing, good control on what we do with our business and how we can make the business more resilient. The first thing I suggest to is look at strong cash reserves. So what I mean by that, we have to have strong balance sheet. So balance sheet, when you look at it, whether it could be personal balance sheet or business balance sheet, we're going to look at what are my assets and what are my liabilities. And my liabilities, what is the debt ratio, right? So the more debt you have, it's of course you are at a greater risk. And the debt that you have, what percentage is what interest rate? Lower the interest rate, lower the problem, higher the interest is. Rule of thumb is anything over 8%, that's bad. You don't want that loan in your balance sheet. Anything less than that, okay, but again, against what assets? Are they income producing assets, or what kind of assets they are? Imagine they're income producing assets. You invested into business, you invested into properties, so they are producing some sort of return back to you. However, we need to look at, do we have enough cash reserves? So one of the rule of thumb is 9 months. So look at your fixed cost. If your fixed cost is $50,000 a month, that is your fixed cost, times that by 9, 450,000, that should be your cash reserves sitting in the balance sheet. Could be in some term deposits or could be just cash, just sitting there, not into stocks, because stocks value can wipe out your wealth, right? You got to do that. And if you're really dependent on one kind of business, one kind of service line, you got to look at diversifying your revenue stream. How can I get multiple revenue streams coming to me? So if one income is gone, other revenue streams will give me some income. Example, if I am an accountant and I'm doing tax and accounting services, what else can I do to offer my services to my clients? This is how I can diversify my revenue stream. So if you are just an employee, just working for someone, so there's just one sort of income coming in. If that person goes, okay, we don't need you tomorrow, you lose your job, then of course you will find a new job, someone else will hire you. But can you have another income stream? So if you have multiple income streams coming to you, at least you won't be fully lost, right? You will have something to fall back on, and then gradually you will build other income streams as well. So diversify your revenue streams, have multiple revenue streams coming to you. And if you're a business, look at your customer segments. If one kind of customer segment is giving too much income to you, that's a major risk. We got to look at different customer segments as well. Example, if I'm providing services to all the building services clients. So if the building downfall happens, all those going to go down, right? So they're not going to come to me. So I got to have different segments. So at least if building clients are not coming, but hey, those medical practitioners are doing very well in health sector, and I also have them as a client. So I might get income coming from there as well. And do some what if analysis. So what if there is I got one major supplier, if that major supplier goes down, who will be my another supplier. So do those what if analysis. So do I have enough backup to find another supplier soon? And I sell this product all the time, and this product I only have stocked up for next 2 months of things. What if I supply chain disruption, I don't get enough supplies coming to me? Can I find another supplier in another country, or can I stock up all that within my warehouse so that if there is an issue I can have? So do those what if analysis. So what if analysis could be for data backup as well. If there is a cyber attack, I lose my data, what will I do? If there is fire, what will I do? If there is a natural calamity, what will I do? Flooding, what will I do? So do those analysis and see, are you okay? And you can create a backup for those. And to build a resilience in a business, we got to have a continuous improvement culture. So that has to be built in your culture. What you're doing yesterday and what you're doing today and what you're doing tomorrow. If we haven't improved what we were doing before and how we were before, then resilience in business cannot come. It can only come when we make tomorrow better by improving. Whether it's a skill set improvement or whether it's operational improvement, something must be done regularly. Important thing is empowered decision making. So if you are the person who make all the decision in your business, you got to trust your workers, the department heads who can make the decisions, empower them so that they can make the decision. So faster decision making, always going to be a better business, more resilient business. Trust your clients, your customer base. So you trust them and make them trust you. It's go both ways. So build loyalty with them. So if they trust you, you will trust them. So there'll be a loyal customer base. So they're not going to go to you. They'll stick with you even if the time is tough out there. You got to make sure you stay compliant. Regulatory framework, you follow the government guidelines. So whatever they have issued, follow all those steps and make sure you don't get into a problem with those regulatory bodies. Staff, very important. If you are even selling a product, your staff is important because they provide customer service. They are on the front line. But if you are like us, who is in a service business, our staff is pretty important for us. You got to look after them, look after their well-being, and measure how engaged they are. If they are engaged with your business, they'll help you. They'll stay with you. Last thing, learn from our mistakes. If something has happened, some incident, we do the analysis and we learn from that, right? Stay focused, keep watching videos like this on this channel. Thank you for watching this video.